Let's get technical. Let's keep talking some earnings here with a focus on the consumer. A couple reports coming out to prepare for. Chartmaster team, Rick Duquette and Renita Young with me. Let's talk Kohl's first. After Macy's big drop, I'm kind of surprised Kohl's shares are not under more pressure this morning.
I'm surprised as well because, as we know, people have been putting those discretionary items on the back burner, so it's been a pretty mixed to low picture for retail when it comes to it. And it depends on what type of retail, though, because we have seen places like Walmart doing much better. But analysts are expecting adjusted earnings of around 24 cents for this name, and revenue is expected to be $3.9 billion. And Kohl's, they've been working really hard to revive the brand. The main focus here has been attracting new customers to stores, and they want to open more Sephora stores in the locations, and then they want to expand their merchandise categories for the home decor and for pets as well. Probably try to get into the, the pet trade a little bit.
Definitely need some of that discretionary income for the pets that seems to be more durable than our own discretionary income.
Right.
But basically anything, to try and turn the story around.
Anything, right? And so we'll see what actually works. But so far, the setup for this does not look like the best, especially because of what happened with Macy's.
Yeah, and last time around, Kohl's reported they were at new lows. I don't really know what's happened the last 3 months, why suddenly the stock has gone up so much. It doesn't seem like expectations are too lofty, like everyone changed their mind on Kohl's.
I just think it was summer shopping. That's
all right, that's true. A little summer shopping, a little discounted Kohl's wear, kind of a company that will benefit from like a TJ Maxx, right, to some extent if people want to move down and save a little bit. What's the rally telling us, Rick? I mean, are we back into like a healthy zone on the chart or what?
Well, we are up about 50% still from those yearly lows we hit near 1789 shortly after the last earnings event, but the trend line has been broken. We were trending upward here in kind of a rising wedge type shape. We've broken below that. We found a little bit of support at our 21-day EMA. Things were actually looking a little promising the past couple days. It was looking like we might take a stab at breaking those recent highs, closing highs just around the $29 level. We crossed above our two moving averages, our yellow 21-day, purple 252-day exponential moving average. We crossed above our volume profile point of control, the area of heaviest trading here, this thick red line. But today, just smacked back down with a vengeance here.
Yeah. It got worse. I didn't realize we were down now 7%. So yeah, there we go. They're
not
down.
Looking too good. Definitely not what you'd want to see heading into earnings if you're bullish. We can see as well momentum fell off sharply. We're now in bearish territory for the RSI. We're below that 50 midline here. So the next step is to assess where we might find some potential support. If this downward move continues, that's probably right about here for starters, near the 63-day exponential moving average, also roughly around the area of a small volume node, near about 2560, right around that area would be probably where some traders might start looking for some support. Resistance, there's plenty to choose from all right here. Our 21-day EMA comes in at 2742. Then we've got the confluence of our 252 EMA and our volume profile point of control near about 2825.
All right, so if this thing slips in between your moving averages, that brings us down to like 25 bucks here. If the next leg is to just kind of settle onto that lower moving average. All right, so that I guess gives us some comfort if you're in Kohl's that you're not going to go back to the lows necessarily overnight, but never know. This thing can really move. It's had a couple bad earnings the last couple of years that have reminded us how volatile the stock can be. All right, but down 7% today does make more sense with where I thought this thing would be given Macy's. Let's talk advanced auto on the repairs business. Generally, the laggard compared to AutoZone and O'Reilly. We know why that is, because they don't have as good of a jingle.
They don't. That's exactly why, right?
Yep.
But also because it's losing a whole lot of market cap. This year, it's down more than 50% year to date.
Wow.
That's pretty huge. That's also the reason why it's losing its spot on the S&P 500 this Friday before the open. It's gone. It goes to the S&P small cap 600
that
instead.
hurts.
That really does hurt, And there's some speculation about what names might be replacing this stock on the S&P 500. but we'll let that come when it comes. However, analysts are expecting adjusted earnings to rise sequentially from $2.60 a share, but revenue is expected to be $3.43 billion. And this stock, it was on pace to keep up with the S&P 500 earlier this year, back in February, right? But then it started to lose its steam, and in March, we saw people favor its competitors a whole lot more. And then that's when that huge earnings report, the very last one that came before this one, that really made it lose more than 30% of its value the next day. So after that, people just got out, and this stock has been declining ever since.
All right. It's been a rough one to watch. Every earnings, it's like there's a new skeleton in the closet that gets uncovered. Last time going from 120 down to 70, and it's almost like they just stopped trading it down here, Rick.
Yeah, it's just gone from bad to worse with every earnings event here. I mean, I just wanted to show the year-long chart just for a taste of what it looks like. We're down about 66% during the past 52 weeks, which coincidentally was also the yearly high. That was the same point exactly a year ago almost. So we're down all the way there. And I wanted to zoom in a little bit on this chart so you could see what's going on a little bit better. So I just did since the past earnings here. You can see it was more of a triangular type pattern here, but it's been broken to the downside. We're trading below our moving averages themselves. The slope is trending downward here. RSI, our measure of momentum, also trending down here. I really am struggling to find anything that looks good in this chart for the bulls right now. Just an unfortunate situation for anyone who was bullish in this name lately. Support and resistance. I looked at our
zero.
Well, that's kind of I wanted to say too, like
support at zero.
Well, so the bottom of the chart is not support. You know what I mean? Like just because it ends there doesn't mean it can't keep going lower. Those two lows that I marked there, 65.67, 63.56, those were our next two lower closes. So those could be areas to watch for support or further downside if they're breached. Resistance, right about here, 21-day EMA in conflux with our volume profile point of control near 70.50. That would be a reasonable spot to look for some resistance.
All right. Advanced Auto rolling over, going into the report. Nothing's really changed here. Continued softness after a year of it going into this number. Maybe we find a little optimism in tech. Advanced, or rather analog devices, ADI, rolled over a little with the chip makers as they softened up the last couple of weeks, but I think a still decent setup going into this number.
A decent setup, but year to date, it's not all that strong. Definitely not strong as the S&P 500. It's up 8% year to date. It's not outpacing the market. We don't always hear this name when we hear about AI buzz, right? But analysts still expect the revenue to come in around $3.1 billion. That would be a drop year over year. Earnings per share is expected to be around $2.53. And year to date, that would be up, not by as much though. Pardon me, I said year to date it is up, but not by as much as its semiconductor peers.
Yeah.
But recently, this company got a price target hike at UBS to $215 a share from $205. That's around a 20% move to the upside from where it's been trading today. So there's at least some optimism from that analyst that this company's stock could go higher this year.
Maybe starting off the week tomorrow morning, basically, that section of the week, rather, for the chip makers that are going to culminate with NVIDIA. But we've also got Marvell, too, so it's just going to be a busy couple days here for chip stocks. Do we break our long-term average here, Rick?
Well, this was actually kind of exciting at first when the market opened because it looked like we were breaking above both our long-term moving averages, our purple 252-day EMA, and this downward sloping trend line. But the move has faded significantly since then. We're back below that moving average now. We're looking like we're on pace to go back below our trend line. We got to wait and see what happens though heading into the close. The day is still very young, but overall, not looking too encouraging. Trading below all three moving averages. All three or rather, our two shorter ones are trending downward. Our long-term one is sideways, which has flattened out because it was trending upward before here. So really nothing too great in this chart either. Kind of another one that's had a move up that's starting to peter out a bit here. Our RSI momentum still trending downward here, still in the bearish side of the camp. Nothing really helped out here. I guess the best thing you could say is it's not in the oversold area yet, but watch out for that to happen too. In terms of support and resistance, well, the 252-day EMA, the purple line here near 177.80, that'll be a crucial spot to hold as we head into the rest of the trading day here. To the upside, we've got our moving averages and our volume profile point of control up here. So let's say the 21-day and the volume profile point of control come in near about 184, 185 or so. To the downside, watch to see if we break through those old lows near about, I believe, 173 or so. Then we've got our worst recent intraday low near about 162 right here. So that could be another area to watch if things really start to go haywire.
You basically want to hope, if you're bullish this stock, that it stays in this kind of volume profile section up here. Seems like the air gets a little thin once you get past that 165. If it breaks down past there, I mean, it's a pretty well sectioned off chart. A lot of trading up here, some trading here, a little bit down here, which has been very good because it's been going in that direction. So now we'll see if they kind of act as stair steps of support, if there's any weakness, and if not, then we'll see if we get back up into the 185-ish or so, kind of the meaty part of that range up there. Analog devices in the morning. We've also got Marvell, NVIDIA, some other tech names too, but when we come back, it's a focus on the gaming world. No Barbie, no problem.